Okay, everyone. So I started recording a stock market technical analysis video this morning, but then I noticed there's some price action changes happening, so I've got to re-record it. I don't want to get, I want to get the most relevant information to you guys. So here we go. Triple Qs, guys. We've got, we're getting some selling showing up in the last hour or so. Getting rejected so far at this level, 291.50. That is a level I've talked about for quite a while. If we go down to triple Qs, you can see on the daily chart, that was the level I had marked out as a potential area of resistance. Now, this morning, the price action, I woke up, I kind of looked across the market, and I just didn't see enough to tell me we're likely going to get rejected there, but I might have missed something because I did pull my triple Q short, stating that, okay, I think it could sell off still, but I need to just go flat and just reevaluate. That's kind of where I'm at right now still, but I do want to point out the potential for, for this to be the end of the rally. Now, the one thing is we have this downtrend line on triple Qs, all right? So we've got these levels to watch, and this would be the area of big resistance. However, it's so obvious now. Maybe the sellers are going to step in early and step in here at this 291. We're already seeing it so far today. Whether it continues, I need to see that. But if we start to see some more impulsive selling and the dip buyers don't just step right in and buy it up tomorrow, then, this might have been the high for this rally, and we're going to get the move down. Okay, I know I've been calling for that move down for a while. The market's tricky in bear markets. They like to rally it when you think it's going to crash and break it down when you think it's going to rally. But I do want to point out, the major level of resistance is this downtrend line. It's about 307-ish, somewhere right in there, up to about 313.50 on like an intraday pop or something. But, because that level's so obvious, they might just sell it right now. All right. So I'll jump back in short if if we continue to see impulsive selling. But look, on the hourly, this is where likely the dip buyers are going to step in. You can see here on the daily chart, look, that was resistance right there at about 285. Resistance again. We broke out, and so if the dip buyers are going to step in, they're going to step in right here likely and try to rally this thing up for another move up to that trend line. So I'm not convinced yet that we're going to just completely break down, and I'm not, reshorting it. For right now, I'm probably just going to just remain flat today and try to see how this plays out. Now, if we break below this 284.50 area, especially impulsively, that's likely going to be a sell signal in my mind, and we are going to start to head lower. Otherwise, maybe the dip buyers step in and they rally us up to 305.50. So I'm not really looking to go long. Still interested in shorting, but I want to short at key levels of resistance or breaks of support. And again, so just to reiterate, our support is right about 284.50, and resistance is, I think from my perspective, resistance is about 306.50, 307, somewhere right in there. Okay, moving on from that one, small caps. Now the small caps looks a little different. Here's the thing about the small caps. On the daily chart, this is coming off the all-time highs, and you've got a clear downtrend to watch. You've got the all-time highs here. We had a reaction right in here, and we're right there at that potential trend line. Now, I only have 2 data points, so it's not a confirmed trend line. We need to see some sort of a reaction around here to help confirm this as the downtrend line. But that is a very, high probability that it will confirm. We're already seeing, we're seeing some selling up around these levels. We also have some resistance right in here, this horizontal resistance, which is the former kind of high, about 190. So again, it's a very objective level to short right in here. So I'm going to probably stick with my IWM shorts. They don't look as, they look like they're at a key level of resistance. Okay, so that is IWM. If I go to the hourly, you'll see we're building some negative divergence on IWM on the hourly right there. And it's both on the RSI and the PPO. So we have a divergent high right there. So I like IWM to get rejected right in this area. Probably not going to happen today. I suspect they're going to try to battle it out a little bit. But yeah, I like it for a short in this area. Okay, and the dollar. So the dollar clearly broke the bull trend. All right, this is a daily chart. So this is going all the way back to, basically February, January of this year. The dollar's been in a bull trend right there. This is the key level that we've all been watching. And sure enough, we have a sell signal. We got that a couple days ago. I pointed that out. So the dollar is now sell the rip. But again, we had the first initial impulsive breakdown of the dollar. Today, we fell to what looks to be pretty decent support. And so we should get a bounce here. Let me kind of just point it out. You can see that key level right there at 105.20. All right, that was from a resistance. And then, impulsive candle when you break above it. Also held it as support twice, and sure enough, hit it today. So again, and we're seeing the buyer step in at the support level. So again, I think we probably have a little more upside in the dollar, but it's sell the rip. So as you rally into areas of resistance, the dollar should sell down. I think right now, I would think the dollar would probably stop its rally over the next few days, somewhere right in here at about 108 or so. Now this should continue. As the dollar continues to rally, there should be some pressure on gold. And gold, this is gold bullion, you can see rallied into kind of the 200-day moving average. Bigger picture though, gold is by the dip. So this is your downtrend line that was started pretty much in March of this year, and you can see all the reactions. There's another one. There's one. So there's your breakout. Now I think we come in for I think we have a dip, right? So gold, in my mind, is by the dip. I'd be looking to buy gold probably around 1726 for a rally. So we got a breakout, we buy the dip, and it should continue higher just as the dollar should continue lower over the medium term. Okay, next up I want to talk about the financials and JPMorgan as potential trade ideas. Again, it's going to be really hard for me to get you guys in the perfect entry, the perfect area of a trade, but I'm definitely trying to get you, definitely on target. So XLF on the weekly chart. All right, this is the bull market in XLF that was started back in 2011 is really when XLF established a trend. Back in 2009, a lot of the crash was in the financials. So they pretty much just plunged down, and they didn't establish a decent trend until about 2011. And then from there, on this weekly chart, you can see we had lots of areas where we held this trend line. There's another one. You can see finally we broke in this is COVID. And then from there, it was resistance. The Fed managed to push us back above the trend again, and we held. And we have now broken that trend. So there's your sell signal right there on the weekly chart, and you can see we back tested, rejected. Okay, and here we are right now. This rally that we've seen has gotten us very close to the trend line. Again, it's a very obvious trend line. The sellers might step in early. I think it makes sense to probably look at, at least in my mind, or maybe what I'm trying to do. I don't recommend anything, but start establishing a short position, and this is a weekly chart. So again, if I look at the daily, we could pop up, we could pop a little higher, but we're above the 200. It's a perfect bull trap. If you sell down here and, head back below the 200, it's definitely a good bull trap. On the daily chart, you'll also notice, let me kind of clean this up. Okay, so on the daily chart, you'll notice that we have negative divergence here on the RSI, and the PPO, is a divergent high. If I zoom in, just barely. I mean, it's close enough where we could call it. Now, you'd want to see this turn down to really confirm. You'd want to see the PPO start to turn down like that to help confirm that. But this is the daily chart. So if we start to see that turn down on the daily, we're going to have negative divergence on the daily, meaning, you basically made a equal high right here than the former high, and yet less momentum, especially on the RSI, and kind of equal on the PPO. So this might chop around a little bit, but again, we're seeing signs that this rally, at least in the financials, is coming to an end. We're at major resistance, just slightly below, showing negative divergence. So this might take a couple days or weeks to really play out. And again, that's how these trend changes typically take. I look at something Sometimes it takes a couple weeks for it to really play out, so we could kind of grind around like this. But again, I think there's pretty limited upside, although potential for maybe a little bit more on XLF. Okay, so that brings me to JPMorgan, one of the largest components of the XLF. JPMorgan, we're on the daily chart, and we don't really have negative divergence on the daily. Okay, so one thing to note, but we do have a key level of resistance that we're kind of trading right into right now. You can see we had a reaction there, had a reaction there, a little one right through there. So we've got some reactions. We're just slightly above it, or we have been the last few days. 133, we'll call it 133-ish, somewhere right in there. And if I go down to the hourly, yeah, it's selling back below. So we might grind around a little bit on this level. I don't see negative divergence on the daily, but clean and clear negative divergence here on the hourly. All right, so we definitely have that. We're at a level of resistance. So again, I don't think it's a hard short in my mind. Definitely doesn't seem like a hard short, but potentially something to start nibbling on. That I might look at. You know, again, for today, I'm just kind of looking to not really do too many moves today. I just want to kind of reevaluate, but I'm trying to point out some potential trade ideas for the future. This looks like one of them for a move lower, a trending move lower, and then because again, if I go back to really XLF, but if you look at this one. I go to the weekly chart. Here's your bull trend going back to 2009 on JPM. And look, we broke trend back in COVID. They recovered it, and then we broke trend. And it's clearly in a bear market, and this is a bear market rally. This looks exactly what bear market rallies look like. You know, you kind of work your way lower and then spike higher. Okay, sorry, I had to pause the video. But anyways, you spike higher in a bear market rally only to be sold into later on. All right, down, for the next leg lower. So yeah, to me, it looks like a good area of resistance for sure. Okay, I talked about AMD, and again, this kind of is very similar to triple Qs, but here's the thing. We are in a downtrend right there. All right, we spiked to resistance today. They popped it a little bit, but it's being sold into. So this is resistance, and again, if I roll out to AMD, this is a key level of, it was a key level of support right here, and it's about $73.50. We're slightly above it now, but we see that dip back below, and it's going to likely signal that we're going to get rejected here and make the next leg lower. All right, so I still think it makes sense for a short here in AMD. Looking at the hourly chart, not a ton of divergence really, so we could chop around a little bit, but and that's kind of what I'm thinking is maybe we just chop around a little bit on the triple Qs and stuff before we get rejected. Hold up here for a few days, maybe a week or two, and then get rejected. So, and if triple Qs does go on to hit those upper trend lines I just pointed out, then AMD is going to probably do that. Kind of grind around, build that negative divergence over time. So we'll look for that. All right. At the end of the day, we get a break back below this 73 area. And that's going to be pretty bearish. All right, a nice impulsive breakdown below 73, and you should sell down minimum to the bottom of the channel, which is about 59, and very likely a lot lower. Okay, Snow to me looks like a short, but there is one caveat I want to point out. So, all right, we'll look at Snow. Again, on the daily chart, clear downtrend line. We've been walking down this trend line. Resistance here every time we've hit this trend line, and we're pretty close to that trend line now. We rallied into the trend line. If I go to the hourly chart, you can see we rallied into it. As we were down here, we had this bullish falling wedge, and they were divergent lows, all right? So you had bullish divergence with a bullish falling wedge. Boom, you get the gap up in the big impulsive rally right into resistance. Now, you can see we basically are starting to build negative divergence on the hourly, all right? So we have a trend line to potentially watch. I think something like this, you mark it out about like there. And a break of that trend would likely signal the next leg lower. The only caveat, though, that I would want to point out if I go back to the daily chart, we have earnings coming up here in a little while. So about 2 weeks or so before earnings. And that's going to kind of throw a wrench in things. So ideally, I don't like to take positions ahead of earnings. There might be a trade in the next 2 weeks before earnings. If you want to kind of active trade. then there's obviously this hourly trend line right here to watch. So a break of that, and we'll probably come down and fill the gap. All right, so that's just a potential idea. Okay, and for now, that's kind of all I got. I mean, there's lots to look at. There's a lot going on. Bonds seem to be rallying. If I look at TLT, you can see those are rallying. So rates are dropping a little bit, and that should continue to, tech likes falling rates, as does gold. So again, I'm a buyer of dips in the gold miners. Not extremely hot on shorting tech right yet, but the financials look kind of interesting for a short. So maybe we're seeing some sector rotation out. Basically people are buying tech and going to be selling like financials and maybe some of these other kind of safety stocks that have done well. So that's kind of what I'm thinking right now. Tech might continue to rally a little bit, and these financials maybe sell off, and gold miners should continue to rally. All right, I'm going to get the video out there, guys. If you're interested in learning this as a skill set, again, I can't get all the trades right. I don't get them all right. I do get some of them wrong. We have to manage our risk. So, today I did stop out of my triple Qs. I only had a small position because I covered my I closed out my triple Qs. If I go back here, right before the CPI meeting, I lightened up on that position. I pointed that out to the private member group and pretty much everybody. And then, I hadn't really added it back. Now, I think if we can rally a little more in tech, I will be interested in reshorting tech for the next leg lower, because I'm continuing to trade under the premise that we are in a bear market. But for right now, just stopped out of that for a loss, and looking for the next entry on a tech short. All right. And maybe we'll look, and I'm probably going to start shorting the financials here in the next day or so. Okay, that's what I got, guys. So if you're interested in learning this for a skill set, check out my course, link in the description below. Private member group, link in the description below. Catch you on the next one.